Hey there, it's Naomi Blohm with Total Farm Marketing with this week's weekly wrap-up video. Lots to talk about for the week, so let's get started. But first, a reminder that using futures and options can be risky, so have a strategy that works best for you. Speaking of risky, if you remember how Monday started, we were all talking about the COVID Delta variant and how things were spreading, and that spooked the stock market. It spooked commodities in general because of fears that we would have another shutdown and that would curb demand. But by the end of the week, even though the stock market was down 900 points on Monday, by week's end, stock market was up. And as we finish out the month next week, we'll see if we can continue to make new highs for the month of July. That would be amazing. And that would just continue to keep that upward channel in check and be a little bit more optimistic for the future. Crude oil futures also were down pretty hard on Monday because of the COVID Delta variant news. And overall, from the recent high, crude oil is down about $10, but finishing the week a little bit stronger. Things to be aware of: the market is still trying to figure out where demand is going to be and how much of a recovery the global markets are going to see. There's talk that OPEC is going to be increasing production, so that kind of put a lid on prices getting above that $80 mark. We have a potential bearish reversal forming on this monthly chart, but if it ends up being bearish or not depends on how the marketplace finishes out the month, which we will know more next week. But that's just something to be aware of. Switching over to the grain markets, corn futures this week, pretty quiet overall. The market continues to trade in a sideways pattern. 575 is short-term resistance. 540 is short-term support. In the bigger picture, $6 is resistance and $5 is support. Which way this market finally breaks out totally depends on Mother Nature and what she has to bring. But if you look on this continuous monthly chart of new crop futures prices, we're still in an upward trend. How we finish the month next week is really important. If we can have a strong finish, meaning finishing, I would say, between 550 to 575, that keeps that upward channel and upward price momentum intact. But if by chance they're putting rain in the forecast or cooler temperatures, that might be enough to trigger some technical selling and some seasonal selling. So Mother Nature is what we need to be watching next week as far as grain price direction. Soybean futures, similar thing, trading overall in a sideways pattern. But the market did start the week off above $14 on hot weather concerns, and we finished the week 50 cents lower. So we're in the middle of the range, but the market's having a hard time getting back above that $14 price point. So depending on the weather going into the month of August, if hot and dry is in the forecast, that'll be really supportive for prices because the line in the sand for yield for soybeans, we cannot afford to have anything less than 50 bushels nationwide, or we're just going to be having the tightest ending stocks in history. So the weather is so important. Until we get a better handle of that, it just feels like prices might continue to trade in a sideways pattern. But looking at the bigger picture here, new crop beans, just like corn, in that upward channel, nice strong upward trend. We've been in, essentially for a year. So next week is really important for trade. We're going to be watching the weather, and that's going to dictate price direction for the month end for the grain markets. Wheat futures started the week strongly higher following the Minneapolis wheat markets higher. Chicago wheat got above $7, but couldn't quite close above $7. The weekly reversal from last week is still there on the chart. So to me, it says that the marketplace wants to dig its heels in here because now we have tight ending stocks for wheat, just as well as corn and soybeans and even the oat market. And then, of course, that canola crop in Canada is getting smaller. So there still is some potential for upward price momentum for this market. But as far as grains in general, it really depends on, again, Mother Nature next week. Spring wheat futures this week got up to close to that 950 level. It's a fantastic rally. But again, with bull markets, they have to be fed daily. And the market traded the fact that the weekly crop progress ratings showed severe declines. And we just couldn't find any more buyers up past that 950 level. So a little bit of profit taking is what we saw by the end of the week. Switching over to the hog market. That market has been on a nice little push higher here over the last couple weeks. We're seeing a balance of just good domestic demand and export demand this week was okay. We came in at 24,531 tons for weekly export sales. That was over double from last week, but a little bit behind the 4 week average. But when you look back at the cumulative sales for 2021, we're at 1.2 million tons, down only from 1.3 million a year ago at this time. That's the second highest on record. And we're hearing, of course, the chatter that the Chinese herd is rebuilding. But at the same time, we've got decent demand here overall. So that hog market's still trying to gain a little traction in that short term upward channel. Switching over to the cattle market, in the cattle market there's just been some consolidation trade and sideways trading going on there. The market is trying to just get a handle on where that demand is. So a couple of things happened this week. Weekly export sales for beef came in at 25,000 tons, and that was actually up from 9,000 last week. And this is the highest that our weekly exports have been since March 11th. So cumulative sales for 2021 have reached 733,000 tons, up from 578,000 a year ago. And this is actually the highest on record for exports. So we've got hot demand for beef in the domestic market as well as the export markets. So that is really good. Cattle on feed report today came in, and the on feed number was at 99%. That was pretty much right on expectations. The placement number came in below expectations at 93. The expectation was closer to 96. And the marketed number came in at 103, just a little bit higher than the average guess. So not anything totally out of whack as far as what trade was expecting. So next week, we'll probably just go back to trading cash and watching what the beef market does for demand. But overall, the cattle market, was one of those things where it's consolidating, but it still is in this slow uptrend as well. Lastly, we're going to talk about the milk market. That had been, of course, just working lower for the past few weeks. On Thursday, the USDA released the milk production report and the cold storage report. Milk production for June was up 2.9% from the same month a year ago. This is actually a little bit supportive for prices. A production increase of 2.9% is large, but when you compare that to how the May number was at 4.7% and April was at 3.5%, at least getting that number below 3% was encouraging. So lots of milk production out there, but it's starting to trend lower. And the cold storage report showed that total cheese in storage was up 1% from a year ago, but down 2% from last month. Kind of looks like the milk market's trying to dig in its heels for prices. So we'll see what next week can bring for cash cheese demand and keep an eye on those exports as well. Looking ahead to next week, I think the biggest thing to be aware of, it's just the end of the month, and so there's going to be position squaring from the funds. We're going to see trade on Sunday night, trade whatever the weather forecast is. If it's staying hot and horrible with less chance of rain, we're going to see the market up right away next week. But if they put better chances of rain in the forecast, it's going to keep prices pressured. Also, we are going to be aware that it's first notice day for August soybeans, soybean meal, and soybean oil. But again, the bigger thing is that it's just going to be the end of the month. So the funds like to do some position squaring and then gearing up to start the month of August. So thank you so much for watching. It's always a pleasure to be with you. If you have any questions, feel free to reach out to the team here at Total Farm Marketing. Give us a call at 800-334-9779. Thanks so much.